Now let's look at Sam. So Sam earns 1.5 million shillings a month, or earned. This is history because now he's much better. Sam is 54 years old, 2 children, 22 and 25 years, both in university in the US. But his monthly expenses, 1.57 million. Why? Because, oh, my daughter needs to go to Spain over the holidays. And, you know, we must, I don't know, this and the other. And so when I saw this, I was so shocked. Because for me, I was like, 1.5? We have assets, right? And he does have assets, except that his debt and expenses are extremely high. And so when you do net asset value, there's something there, but it's a stressful situation because he's also 54 and will be retiring soon. And so we were in a time of just trying to solve that situation. He's much better now, sort of being able to manage expenses, sold some of the assets that were not making sense, and is now investing well. My point here is this. The choices of investments that Sam would need to make, the choice of what Rose would need to do are very different because of their personal circumstances. And so when you're thinking about investing, you have to start with understanding investing begins with you. And you then have to go through a process of trying to think, how do we do this? So at FAIDA, one of the things I've tried to do, because obviously, you know, it's something we have to inculcate in the culture of how we run our business, is helping our clients understand what is their goal. You can't just invest in something because it's a good idea. What are your goals at the end of the day? What do you want to be able to do? Some years ago, I encountered a gentleman through a book called Ashwin Chabra. And Ashwin Chabra is one of those guys, you listen talking and you're like, what did you just say? He's a physicist, I don't know, he did math and physics to a master's level, did PhD, and then went into the financial world and became a lecturer, I think, at Yale University. And he then now, during his PhD, discovered a new, what we call asset allocation model. And I love his theory because it builds on what we learned. Anybody did finance? Anyone did finance in school? Yeah, so there's asset allocation models that sort of sound nice in theory, but when you go into huge high net worth investors' portfolios, you don't quite see it applied practically. But I love what he did, and I'll be sharing, everything I'm sharing now is based on his thinking. And his theory is this. The problem is that we look at our investments and don't think about it as a whole. Your talents, if you're in business, your brand, you don't think about your land, you don't think about your home, you don't think about your career, your expertise as an asset. And so because of that, we tend to be very haphazard in the way that we invest. So let me give you an example. So Yale University, for example, most universities abroad have an endowment fund. So I remember listening to somebody saying, oh my gosh, this guy who manages the portfolio at Yale, he's so boring and just doesn't know how to invest. Because they only have money in bonds, treasury bills, and equities. But you know, they need to be able to look for opportunities to grow this wealth. And what about if the market crashes? How are they going to manage their risks when the market crashes? But when I listened to Ashwin Chabra's theory, and I will come back to our personal finances, he said, but just wait a minute. From a security perspective, and I'll share what this is. From a security perspective, Yale has built the kind of brand that if they decided to increase their fees by 20% tomorrow, will they lack students? People will beg and borrow to go to Yale. And so because of that brand, they're able to then have the money that they need to meet their day-to-day expenses. That's not even an issue. And then he says, in terms of being able to create real wealth, all Yale needs to do is call their alumni and tell them, please, can you sell to us? In fact, not just sell. Can you give internships for our students? And so because of that, they're going to constantly have students coming in and they'll be able to create massive wealth, which is what they have done. So because of that concept, I began to understand, you know what, when we're thinking about investing, you have to look at yourself in totality. So let's look at that now. So the first thing is you have to ensure, when you have assets, the first thing your assets must do is ensure that you can meet your basic needs. Your need for food, for what else? Shelter, what else? Yeah, even Wi-Fi, right? Your basic needs must be met. You don't want a situation where Kenya Power has come to cut your lights because you're broke. The next thing your assets must do is maintain your current standard of living. There's this thing called inflation, which causes the rise in prices of goods and services. Today I'm enjoying bread at 100 bob, tomorrow it's going to 150 or 105, whatever the increase is. Can I continue to enjoy it? I enjoy having a massage once in a while. Can I continue enjoying my massage? Whatever those things are, you want to be able to continue to enjoy that lifestyle. And then the last thing your assets must do for you is give you an opportunity to create real wealth. Because guys, money is a tool. And the mistake that we make is that we just want money for enjoyment, money to just show people I have it. But is that the purpose for money? I don't know, maybe it is for you, but I don't want to be rich in shillings and cents and be poor towards God. And I want to be able to, I recognize that I am here for a purpose. And I'm here for a purpose that I want to be able to fulfill. And the moment I get so consumed with creating this wealth, then I lose the plot. And so because I'm not here just for myself, I will not be satisfied with a 1.5 million shilling salary. I'm here for bigger and better things. Not so much the amount, but for impact. And so you want your assets to do those three things. And so using Ashvin's model, there's 3 different baskets that come out from that. There's a security basket. Anything that I invest, whatever I invest in, I have to have those assets that are just for my security. Those things that I know I will not lose my money, because if I need to access that money because an emergency has happened for me or for someone else who's close to me, or because life happens, then it's there. Then there's life enhancing, and then there's aspirational. So let me go through them, and then we'll look at examples of investments.